What if the biggest threat to today's banking giants isn't another megabank, but a blockchain-powered network that can move money across the globe in seconds? In the next 5 minutes, we'll uncover why Ripple, the company behind the XRP Ledger, has become the bank's worst nightmare. For decades, banks have relied on SWIFT, a secure messaging network, to move trillions across borders. But SWIFT isn't a payment system. It merely sends messages between banks. Funds often take 15 business days to settle because each transaction must wind its way through multiple correspondent banks. To guarantee liquidity, banks pre-fund accounts in foreign currencies. These nostro, vostro accounts lock up capital that could be used elsewhere. On average, an international wire through SWIFT can cost $26, $50. While poor transparency means customers don't know how much they've paid until after the transfer is settled. Ripple Labs, founded in 2012, set out to fix cross-border payments. They built RippleNet, a global payment network, and the XRP Ledger, a decentralized blockchain that settles transactions in 3 to 5 seconds. Ripple's secret weapon is on-demand liquidity. A bank converts local currency into XRP, XRP is sent across the ledger almost instantly, and on the other end, XRP is converted back into the destination currency. While SWIFT transfers take 1 to 5 days, Ripple's infrastructure settles most transfers in under 10 seconds. XRP's transaction fee averages just 0.0002 cents. A study found that current global payment setup costs around 20.9 basis points. Using Ripple reduced this to 14.1 basis points, and combining Ripple with XRP cut it to 12.2 basis points, a 42% reduction. Average SWIFT fees can run 7.1% for remittances to low-income destinations. RippleNet corridors charge about 0.3%, saving institutions and customers millions. Ripple's environmental footprint is tiny. XRP's energy use is less than 0.001% of Bitcoins, making it attractive to banks facing sustainability mandates. By 2025, Ripple reports over 300 financial institutions using its payment infrastructure, with on-demand liquidity corridors covering more than 80% of global remittance markets. Let's look at some examples. SBI Holdings uses XRP to send remittances from Japan to Southeast Asia. Santander's OnePay FX app uses RippleNet for same-day transfers. PNC Bank settles international payments in seconds. Standard Chartered bypasses SWIFT delays across Asia. MUFG eliminates pre-funded accounts using XRP. The XRP Ledger averaged 2.14 million daily transactions in Q1 2025. Its market capitalization surpassed $180 billion, reflecting confidence in its utility. Here's a quick comparison for 2025. XRP processes 1,500 transactions per second, settling in 3 to 5 seconds, whereas SWIFT averages 5 to 7 TPS and settlements of 36 to 96 hours. XRP's average transaction fee is 0.0002 cents, and RippleNet remittances cost around 0.3%, compared with SWIFT's $26 to $50 per transaction. Ripple's system cuts pre-funded liquidity needs by 65%. Ripple's journey hasn't been smooth. In December 2020, the U.S. securities regulator filed a lawsuit alleging XRP sales were unregistered securities. In July 2023, a judge ruled favorably on retail sales. By 2025, the regulator dropped much of the case, providing clarity and encouraging more banks to explore Ripple's technology. Ripple is applying for a U.S. National Trust Bank charter to issue its own stablecoin and access Federal Reserve payment rails, signaling intent to compete directly in regulated banking. In late 2024, Ripple launched RLUSD, a U.S. dollar-pegged stablecoin regulated by the New York Department of Financial Services, backed 1-to-1 by cash and U.S. Treasuries. Ripple envisions XRP as the bridge asset for tokenized real-world assets. The XRPL is being used to tokenize stablecoins, U.S. Treasuries, carbon credits, and even real estate. Ripple's 2025 strategy includes compliance features for banks, on-chain institutional lending, EVM sidechains for Ethereum compatibility, and multi-purpose tokens for bonds and structured products. Ripple reduced minimum account reserve from 10 XRP to 1 XRP in December 2024, helping active addresses grow by nearly 300 to 400%. Banks earn billions from correspondent services and foreign exchange spreads. Ripple threatens these profit centers through revenue erosion, capital efficiency improvements, and disintermediation. Regional banks and fintech platforms have embraced XRP, offering cheaper remittances. If banks don't adapt, they risk losing market share to more agile competitors. Ripple isn't the only blockchain disrupting finance, but it occupies a unique position. It works with banks rather than replacing them, offering compliance and regulatory features institutions need. Governments are piloting central bank digital currencies on Ripple's private ledger, hinting at a future where public and private blockchains interoperate seamlessly. Whether banks see Ripple as partner or threat depends on adaptation. The era of slow, expensive cross-border payments is ending. Ripple accelerates money, reduces costs, and democratizes access. For banks clinging to legacy revenue streams, that's a nightmare. For the rest of us, it's a glimpse of a faster, fairer financial system. Thanks for watching. Don't forget to like, subscribe, and tell us in the comments. Do you think Ripple will change how money moves forever?